Microsoft just told the SEC it has signed $329.1 billion of data center leases that have not started yet. That is 99% of a full year of company revenue, and none of it is on the balance sheet. And it is accelerating. Microsoft disclosed that same figure in each of its last 3 filings. $155.1 billion in December, $196.6 billion in March, $329.1 billion in June. It more than doubled in 6 months. Here is fiscal 2026. Revenue of $331.8 billion, up 17.8%. Operating income of $155.2 billion, up 20.8%. And reported net income of $133.7 billion, up 31.3%. That last number is the one everybody quoted. It is also the one Microsoft itself adjusts. Look at the spread. Revenue grew 17.8%. Operating income grew 20.8%. And net income grew 31.3%. A 10-point gap between operating profit and net profit is not operating leverage. It is something sitting below the operating line. Microsoft's own adjusted figure, the fourth card, grew 22.1%. That something is OpenAI. Other income swung by $15.6 billion, and $11.3 billion of it is the OpenAI stake alone. A $4.8 billion loss last year became a $6.5 billion gain this year. The filing says the gain relates primarily to the dilution gain from the OpenAI recapitalization. That is a remeasurement of an ownership percentage. It is not cash, and it is not operations. Underneath, the growth is concentrated. Intelligent Cloud, which is Azure and the server business, grew 30% to $137.8 billion, with Azure itself up 41%. Productivity and business processes grew 16%. And more personal computing actually shrank 1%, with Xbox down 7% and Xbox hardware down 29%. But here is the cost of that growth. In Intelligent Cloud, revenue grew 30%, while cost of revenue grew 44%. Segment gross margin fell from 62.2% to 58% in a single year. That is a 4.2-point drop in the exact segment carrying the company. Every incremental Azure dollar is arriving with more cost attached than the last one. Which brings us to the spend. Capital expenditures went from $28.1 billion in fiscal 2023 to $115.9 billion in fiscal 2026. That is 34.9% of revenue. And it is not the whole bill. Another $24.6 billion of data center capacity arrived through finance leases, which never touched this line. So operating cash flow rose 34% to $182.9 billion. And free cash flow went down, $67 billion this year against $71.6 last year, and a peak of $74.1 in fiscal 2024. Free cash flow is lower than it was 2 years ago on 35% more revenue. The tax note confirms where the money went. Total tax expense rose 47.7% to $32.2 billion. But that is a book number. Current United States federal tax actually fell 82%, from $14.1 billion to $2.5 billion. That is what immediately deducting a $116 billion capital program looks like, and it reverses as the assets depreciate. Now the two numbers that frame everything. On one side, total contractual obligations of $743.8 billion, including that $329.1 billion of leases that have not commenced. On the other side, contracted revenue not yet recognized rose 84% to $678 billion. Those two figures are almost the same size. The build is not speculative in the way the coverage implies. At $390.54, Microsoft trades at 22.6 times adjusted earnings and a 2.31% free cash flow yield, nearly 30% below its 52-week high. A scenario model turns on one assumption: when capital intensity normalizes. Bear case near $210, base case near $365, bull case near $600. Implied value understated assumptions, not a price target. So, the bottom line, 22%, not 31%. That is what profit growth looks like once the OpenAI mark comes out. And it lines up almost exactly with operating income. Watch three things next year: whether cloud gross margin stops falling, whether free cash flow turns back up, and whether the leases commencing in fiscal 2027 arrive with customers already signed for them. Nobody wrote this by hand, and the trajectory you just saw is not in any single document. It came from reading the same lease footnote across 3 separate filings and comparing them, which is what a queryable filing graph gives you and a folder of documents does not. This entire analysis was built on the RoboSystems SEC shared repository, structured filing data for every public company that files. Revenue, earnings, balance sheet, cash flow, segment breakdowns, all queryable, all from the original XBRL. If you want to run your own deep dives like this one, the link is in the description.